Hello and welcome to Turtle Forex, and welcome to this first screencast of a video that I'm going to do to kind of explain the process that I use to look for trading opportunities using the strength meter. Now, the strength meter is a custom indicator that I wrote a couple years ago. I'm not going to really get too much into the strength meter itself, other than the fact that it basically just takes the overall strength of a currency instead of the strength of a currency against another pair. In other words, like it's a not a RSI for the euro US dollar. It is an RSI for the euro or for the pound or whatever. And on this chart that you're looking at are the 8 individual currencies that I look at. And today we're going to be focusing on the pound and the New Zealand. The pound being this darker green, the New Zealand being this lime green. What I try to do in the morning when I start my session, the very first thing I'm going to look at is this overview chart. Now I'm going to just pop this here, and you can see that I've got a bunch of different profiles that I have, and this profile here is my overview profile. That's going to give me my snapshot to try to determine if there's anything going on that I might want to look at. Now, I got up earlier in the morning, and I had actually traded the yen. But this setup actually occurred a little bit later in the morning on Friday, and I want to focus on that because it's a very good example of how I use this. So what I'd be looking at this point is the New Zealand dollar, which would be very interesting to me in an oversold level because it's definitely a strong currency, and the British pound, which while it isn't a particularly weak currency, it certainly isn't a strong currency either. So that setup would very much interest me at that point. And just to show you why it would interest me so much is I'm going to swing over here to the daily strength meter. And you can see the New Zealand dollar is far and away the strongest currency on the daily. And the British pound has just kind of been languishing below 50. It snuck up above 50, but it had been moving down for the last couple of days. So I just would have viewed that as a nice pullback on both the pound and the New Zealand that would be set up for a really nice pound New Zealand short. So at this point, what I would be doing is I would now go to my pound profile on the 15-minute. And you can see here that I have a British pound strength meter on its own with a 10 and 20 period moving average. That kind of just smooths out all this craziness that you see in a normal strength meter. Just makes it a little bit easier on my eyes. It's not something that's necessary, but I like it, so I use it. And then we have the individual pairs. We have the pound dollar, the euro pound, the pound yen, and then over on my other screen here we've got the pound Swiss, pound Australian, pound New Zealand, pound Canadian. They all have their own individual paired up strength meters, so I could look at them together. Each one of these also has, if you look here, has my dynamic daily range indicator on that. I also use that for potential points where things could run out of gas and reverse the other way. But what we'll do is we're going to swing over here. I know we'll just stay right here. And we're just going to take this pound New Zealand and open it up so it's a little easier for you to see. So, what I'd be looking at is the fact that it looks like it broke up through this previous resistance level, but that doesn't concern me because we know that these market makers like to fake you out with just kind of pushing out of a range a little bit to make you think something's breaking out. I'm not buying into that lie, not on the pound New Zealand anyway. So we can see here, this is where we were looking at. And if you come down here, let me just put the crosshair on. You can see right here is where we were with the pound up there above 60, the New Zealand below 40. Now the New Zealand started to tick up, but you can see here that the price kept moving up, and that's because the pound was actually moving up stronger than the New Zealand, which is what caused this. But you can also see on the first tick down that we got a nice bar here, and that would have been the bar that we would have got in on. So as I'm watching now, just remember that I don't see this red bar yet. I just see these two green bars, and I'm waiting to get in on this trade because it's for sure a trade I'm going to take. I just have to wait until I get confirmation in the price action that it's good to go. So I'm going to swing you over to another chart that I'd be looking at this point, and this is on my trading station. And this is the pound New Zealand on a 15 and a 5, and then I have a 15.55 slow stochastic on both of these. I happen to like that setting. I've been using it ever since I learned how to use a stochastic. You could use whatever setting you want. This one just happens to work for me. Seems to be in tune with price action pretty good on currencies. I also used it back in the day when I was trading stocks, but that's a different story. So what I've been looking at this point is the fact that we're overbought on the 15 and we're overbought on the 5. So we've got that. We've got the extreme levels on the strength meter, and we've also moved up right up to the pivot, the daily pivot, and that would be a place where maybe this thing's going to run out of gas, and sure enough it did. But again, I would only see this blue bar. Now, on the next 15-minute bar, or better yet, on the 5, I'm looking for this 5 to break down on the stochastic. I'm looking for the price action, which you can see we got a nice bar here, and the same thing you would have seen on the 15-minute. And that would have been my signal to go ahead and try this thing out, give it a shot. So probably I can't say exactly where I'd get in. It would be either just above or just below 91, but let's just, for argument's sake, say we got in at 91, because that looks about right where I would think it would be good. You can see this if you can see this little pin bar here looks like it was support at 91, and I would say once it broke that little pin bar, maybe just a little bit below 91 would have been a good spot to get in on that trade. So assuming we're on the trade, now we need to kind of determine, well, where are we going to get out now? What are we looking for? Because we've got a lot of support here. Certainly can't think that we're going to hold out for below 90, not on an intraday trade. Now I think ultimately, yes, the pound New Zealand is going to move down below 90. I think this trend is going to continue down, but you can't look for it all in one trade, not an intraday trade. If we were in on a 4-hour trade, some type of a swing or position trade, sure, you hold out because you're going to be in the trade for days. But these trades, I don't want to be in for days. I want to be in for minutes or hours. And certainly on a Friday, I don't want to be holding into the weekend. So what I would be doing at this point is I'd just go to my Fibonacci, and I'd just take this low to this high and see what points we maybe want to get out on. Now, S1's out of the question. That's way down there. We're not looking for S1. We're looking for something a little bit more reasonable. So let's just pop this chart open a little bit. And here's our levels. Anywhere from 23 to 76 is a level you want to pay attention to. And you want to pay attention that things aren't reversing. We're starting to move off of one of those levels. Now, for this particular trade, I'd be looking for at least 38%. I moved down to the 38%, which is 90.72, which, assuming we got in at 91, would be a nice trade. It would be about a 28 pip trade, say with the spread, maybe 25 pips. So, if you got some kind of indication that thing was stopping there, you'd probably want to get out. But if you look at the 15-minute bar, you can see that it punched through that 38% and really never took any kind of a retrace on it. So at that point, I'm looking for 61. I would more than likely hold out and ignore 50 and hold out for 61. And it did eventually move to 61, so the trade probably would have been about an hour and a half, hour and 45-minute long trade. It would have been a good move. You have confluence you got 61 is 90-45, and you got that 90-50 psychological level. So in all reality, if things got squirrely around 90-50, I'd probably be out of that trade at that point. Maybe I'd have held out for the 61%, but I highly doubt it. Hang on one second. Sorry about that. But what I wanted to just point out to you is how the 76% level was respected. You can see the trade moved down just below the 76% and then shot up, looks like close to 50 pips. So, when you're trading intraday, you can't be looking for too much because these are levels. Now, just to note, it did eventually move back down even below the 76%. But do you really want to sit and watch 50 pips go away and just hope it comes back down? I don't think so. I think you want to take, if you were bold enough to hold out past the 61%, you've got to get out at 76. Even if it ends up going down to S1 later in the day, you got to get out at 76, and you got to be really happy that you took a 70 pip trade and just call it a day and turn off your charts or do whatever you got to do so that you don't try to chase the market. But that's a really good trade there, and that's an ideal setup. And those kind of setups happen almost every single day. I try my best to be patient and hold out for the best setups. Now, you're not always going to get something that's that good when you've got the strongest currency on the daily move down below 40 and a fairly weak currency on the above the 60. But those setups do happen. So you hold out, you try to find them. Sometimes you don't get something that's quite that good, but a lot of times you're going to if you're patient. So that's going to wrap up this video. I'm looking forward to doing more videos on some of the other setups that I use and maybe a video that further explains my indicators that I use. But for now, this is going to wrap this one up. Just wanted to give you a basic idea of what I'm looking at when I'm trying to find opportunities trading. So you guys have a great day, and I hope to see you soon. Take care.